Well, speaking of, shares of Robinhood moving to the upside this morning after posting a surprise beat on profit. The stock trading platform reported adjusted earnings per share of 3 cents in the fourth quarter versus an expected loss of 1 cent a share. Revenue also beating. Robinhood seeing transaction-based revenue climb higher, driven primarily by crypto trading. For more on the results, we turn to John Tadaro, Needham and Company Senior Research Analyst. Good to have you on the show here. So walk us through some of the expectations that we have for Robinhood, especially when you think about Coinbase and that hustle for getting that spot Bitcoin ETF proposal.
Yeah, sure. So Robinhood's actually in kind of a sweet spot where they also trade equities. So when you have these Bitcoin ETF launches on, I believe it was the first day that was launched, Robinhood added those to the platform. So they can trade the ETFs or they can trade the spot Bitcoin. What I think the concern was for a lot of investors was, do the Bitcoin ETFs cannibalize the Bitcoin trading business? And that concern is not only for Robinhood, but Coinbase. On the earnings call, that's not what played out. Robinhood management said that the Bitcoin ETF was additive to their Bitcoin trading business, that you didn't see the ETFs kind of take share away from their direct buying and trading of Bitcoin on the platform.
Yeah, John, looking at some of the transaction-based revenues, I mean, cryptocurrency, that was almost double the revenue that equities trading revenue saw here, where you saw the growth there move higher by about 10%. Well, it increased 8% year over year, primarily driven by cryptocurrencies. They mentioned that was up 10%. Equities revenue was up as well here. And so ultimately bringing in more revenue on the cryptocurrency front. How annexed is Robinhood's future growth profile to the broader crypto landscape and the ability for more users to be able to buy and trade or even just hodl?
Yeah, so 2024, most of the growth we see, we do have coming from crypto. Crypto came in very strong in December and primarily made that beat in Q4 there. So if it weren't for crypto, the transactional activity wouldn't have beat. So we do see that as kind of a growing segment. It's coming off a very low baseline. So crypto volumes obviously plummeted a lot last year. So you're seeing kind of a snapback that's really propelling the growth. For equities options, that growth is a little bit more moderated. It's a more mature business for Robinhood. So we do see crypto as kind of the growth component for Robinhood. That being said, what we would like to see is Robinhood come out and offer more crypto products. They've done a good job. They've added a MetaMask integration, but they still offer a lot fewer crypto assets for trading versus a platform like Coinbase or some of the other crypto native exchanges, if you will. But that being said, Robinhood has moved into Europe now, and so they're trying to grow that crypto presence internationally. The thinking being regulation is still a little bit tight in the U.S., and so that business, they're kind of keeping a little bit of a lid on it almost.
And John, also on the call, they talked about focusing on driving net deposits even higher by improving the user experience and the value proposition. How do they get there?
Yeah, that's so they have taken share from other brokerages. So that has been a positive for us if they can continue to grow that component. We do notice that the platform has improved quite a bit for that traditional kind of equity brokerage business. So that's a little bit more of a slugging match. You have to take market share. There's not necessarily a ton of new assets coming in. So it's a little bit more of a market share battle there versus that crypto component where you can just benefit by more retail investors moving into that landscape. So that one we do see is a little bit more moderated moving forward.
Gaining in terms of market share, but also the monthly active users, that actually was down 4% year over year. What type of kind of strategic play do you believe that Robinhood still has to deploy in order to make sure that they're building out that number and seeing growth reinitiated?
Yeah, so they've done a few product launches to try and increase that monthly active participation. So they rolled out 24-hour stock trading. I believe it's now up to 900 tickers that they offer 24-hour stock trading. So they have rolled out a number of products to try and get that increasing active user participation. What I would say is, if you look back to 2021 and 2022, at least the early part of 22, it was a very different environment. Even though stocks are kind of getting or back around all-time highs, that retail activity in the marketplace is still not what you saw in 2021. So when you do look back a year or 2 years, it's a tough comp, so to speak. So, they have been improving MAUs, but to get back to 2021 levels, if that's what we're looking at, I do think you're going to need to see a lot greater retail participation, not only in crypto, but also in stocks.
What type of inflows are you expecting or anticipating if we do see the Fed move up its rates cutting prospectus or pathway? I mean, especially considering we saw just yesterday what the reality of the number of traders or the number of investors that are willing to step away from certain portfolio plays if the Fed looks like they're going to just stay higher for longer and actually push out that rate cutting cycle even further.
Yeah, so if rates stay higher for longer, we do think that negatively impacts the trading business, Robinhood, Coinbase, all of these. So not only would that likely weigh on crypto prices and maybe even stock prices, but it also, especially on Robinhood, folks might sit in cash longer. They're earning, call it 5% or so on the Robinhood platform. So instead of putting those assets to work in trading, they might just continue to clip that yield. So we do, Robinhood's a little bit of a hedge business where you do have the interest income component of Robinhood, where higher rates that benefits that business, but then higher rates negatively impacts the transactional revenue. So it's a bit hedged, but what I would say is overall, Robinhood, Coinbase, they're going to benefit more by getting rate cuts. So if you do see cuts start to happen sooner, I think that's good for crypto prices, likely good for most equity prices, and then also good for just the participation in trading activity, especially on the retail side. So while that business is a bit hedged, I would say rate cuts sooner than expected, better for Robinhood.
And John, we know that Bitcoin enthusiasts or crypto enthusiasts are always looking for that next catalyst. We know we're supposed to get the Bitcoin halving coming up in April. How does that translate, though, into the inflows that Coin and Hood tend to see when they have this sort of rush and a lift in the price of crypto?
Yeah, sure. So the ETFs have so far been kind of a net win. We've seen continuous net inflows. The one outflow is the Grayscale GBTC product. A lot of that selling has slowed down. So now we're on a trajectory where you're just getting kind of day over day these net inflows to the Bitcoin ETFs. What happens there is folks can either trade the Bitcoin ETFs on Robinhood, so that's a benefit for Robinhood. And then on Coinbase, the institutional flows into these ETFs, a lot of the ETFs are transacting via Coinbase. So those institutional volumes are going through the Coinbase platform, if you will. So overall net positive, we think pushing Bitcoin past 50K has been in part due to these Bitcoin ETFs. So we do view them overall as a positive for Bitcoin. There was a little bit of a buy the rumor, sell the news when the ETFs first came about. But now we're kind of seeing those net inflows just continue to pick up. So that was a positive catalyst. The next one is the halving. It shouldn't be much of a surprise, right? A halving, everyone knows, happens every 4 years. So you would think the market bakes in some of this. But what the market might be missing is just kind of that daily demand that's going to outstrip the daily new supply that comes out after the halving because there's a supply crunch. And that could start to get things going a bit more. After that, the next catalyst for the space would be, as you guys mentioned earlier, whether you get an Ethereum ETF. And I believe the first deadline for that is in May with the SEC.
Well, looking forward to seeing how that plays out. Obviously, either a bit of a different animal here from a traditional token like a Bitcoin. Appreciate you taking the time, John Tadaro. Thank you so much.
Thanks for having me.